Good afternoon. Let's do some business. We are doing it live right here, weekday afternoons at 4. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live worldwide online at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. We did see a mixed finish for the market today. Another nervous day of trading. Investors focusing on those rising bond yields and mortgage rates spiking to the highest we've seen so far in 2024. Also, of course, a lot of concern about what's happening in the Middle East, with Israel possibly retaliating against Iran following that barrage of missiles and drones which attacked Israel over the weekend. Oil prices back in focus. The Dow coming in for a closing gain of 22 points. The S&P 500 slipped 11, and the Nasdaq Composite down 82. Stocks finishing mostly lower today, with the S&P 500 down after opening higher for the fourth straight day, booking its longest such string of reversals intraday since 2018, according to MarketWatch. And the Nasdaq Composite and the S&P 500 both posted a fifth straight session of declines, down to 5.1% and 3.6% over that span. The leading indicators for the economy down for the month of March, just a month after posting the first increase in 2 years. But there's little sign that U.S. growth is easing significantly. The index of leading economic indicators dropping 0.3% last month, according to the Conference Board. That index, by the way, is a gauge designed to show whether the economy is getting better or worse. Economists talking to the Wall Street Journal had expected a 0.1% decline in the month of March, so indeed it did come in a bit worse than expected. As I mentioned, mortgage rates are moving higher on expectations now that the Fed will hold off on cutting interest rates anytime soon. Mortgage rates up for the third week in a row, according to the latest survey out today for mortgage giant Freddie Mac. The average 30-year fixed now 7.1%, and the average rate on the 15-year fixed is up to 6.39%. By the way, the once unthinkable scenario of no interest rate cuts by the Fed this year is now giving way to another possibility, a slight chance of a quarter-point rate hike by June. Some folks are predicting that. Nordstrom reportedly forming a special committee of independent directors now to explore going private, according to the company, a move that arrives as retailers struggle with subdued demand and pressure from investors for stronger profits. We saw Nordstrom shares moving up about 4% on that news. In connection with that move, the company said the committee had retained investment banks Morgan Stanley, as well as another company as financial advisors, as well as a couple of law firms. Closer to home, based in Westwood, LA-based KB Home. The board there has authorized the repurchase of up to $1 billion in shares and raised the company's quarterly dividend to 25 cents a share from 20 cents. KB Home, which stands for Kaufman and Broad, as in Eli Broad, the Los Angeles-based home builder, said the new stock buyback program replaces the previous authorization, which had $113.6 million remaining. KB Home shares slipping nearly 1% today. Oil back in focus, ending mixed today with crude oil back east, West Texas Intermediate settling slightly lower at 82.73, it looks like here, and Brent crude in London down 18 cents to 87.11. It looks like the price of oil in New York moved up by 4 cents to 82.73 after a three-session decline. This, as of course, the Middle East remains in focus. Tax Day, April 15th, now in the rearview mirror this week, but always looking out for you is America's leading taxpayer advocate, Grover Norquist. He'll be joining me live later this hour. There are new calls for defunding of National Public Radio after their business reporter resigned this week after writing an op-ed article blasting NPR for its left-wing progressive bias and suppression of dissenting opinions. He did it again after co-founding LegalZoom, ShoeDazzle, and The Honest Company, as well as BAM Ventures, several billion-dollar companies. Mega entrepreneur Brian Lee, based here in Los Angeles, now has a new venture, Arena Club, combining his passion for sports memorabilia with a tech-driven approach, giving consumers a virtual card show experience. Brian Lee, mega entrepreneur, will be joining me live later this hour. But first, on your money, the markets, and the economy, joining us live now, investment expert Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, good afternoon to you, sir.
Frank, great to be with you. You're doing it live at 4. I know you're doing so much And there is so much to talk about. More than anything, just simply the trend. It's all about the trend when it comes to markets. And as you said, the market's been pretty weak these last couple of months. 19 new 52-week low highs today, almost 300 new 52-week lows. So, many indicators are now that, look, the trend, at least for now, is down. Doesn't mean we're going to collapse. Doesn't mean that we're in a tremendous bear market. But you can't fight the tape. You have to follow it. And at least for now, the tape with so many of those former high-flying stocks, Tesla, Adobe, even Netflix after the bell is down pretty sharply. The tape has turned for so many of those former high flyers.
The days are long, but the years are short. It seems like months, but it's been just pretty much a rough month, right? After that spectacular first quarter we had when the market was hitting at record highs, and now here we are about almost 3 weeks into it. It's gotten, we've seen a downdraft here. Where do you see this market go from here?
Well, the big story is inflation. And, Frank, we've been saying for months now that this is a Main Street issue. It's not a Wall Street issue. It's a Main Street issue. And despite, so much optimistic talk from Washington and from Fed officials and President Biden, Americans are working more, and they know that they're earning less. They feel it. And we're seeing so many pieces of evidence basically suggest that, as you alluded to in your intro, look, we could see interest rates going up. And it's not just the Cassandras, the kind of the Peter Schiffs of the world saying that, Frank. Even earlier this week, Jamie Dimon from J.P. Morgan, he sees interest rates going north of 8%. So, rates have been going up. We've seen gold now at a new all-time high just in the last couple of days. So, every indication is that inflation isn't slowing towards the Fed's 2% target. In fact, it's heating up once again.
Absolutely. And it, of course, was noted on this program just at a time when we were told inflation is supposedly easing, gold suddenly popping to all-time highs, and silver also hitting highs certainly for the year, the highest we've seen in years now, and other interesting things happening with commodities and upward pressure on inflation because of what's going on with the price of oil as well, which also recently hit a new high for the year. What do you see ahead on the inflation front?
Well, I see history repeating itself, Frank. I mean, look, by the end of his term, Jimmy Carter knew that he had to stop spending and start to cut size and scope of government. Biden's not doing that just yet. In fact, he's talking about this massive rollout to student loan forgiveness. Carter tried the same thing in 1978. We saw interest rates back then go from 8% to north of 12%, even 13% in the early 1980s. So, look, I'm positioning my portfolio and my clients over at capitals.com to try to participate in some of these upward moves in inflation. And, Frank, you really have to look for the long term. And I'm not telling anyone to abandon stocks, but, I think an investment in gold right now, GLD, is actually a much better a buy than even Apple, Netflix, or Adobe. They're all now down year to date. So as we always say, investing, it's almost like bar hopping. You have to kind of go where the action is. And right now, the Magnificent Seven, not that magnificent. The real story is inflation and commodities on Wall Street.
On the air live with Jonathan HOENIG. What about good old Apple, part of the Magnificent Seven? It's had a rough year.
Yeah, wonderful company, innovative company, but stock that, at least for now, Frank, is pretty weak, pretty extraordinarily weak. I mean, Apple's down 10% year to date, and it used to be said, as Apple goes, so goes the market. There really isn't the case anymore. So I think this could be an example, not unlike Microsoft. Keep in mind, we think of Microsoft as being, the number one leading company, or one of the top couple of leading companies in the world. From 2001 to 2010, it was basically dead money. In fact, even as late as 2014, it was still below where it had traded in the early 2000s. So I think you have to have a real long time horizon, Frank, when it comes to stocks like Apple. Wonderful companies, but they've come so far for so long, they're due for a rest. I think that's exactly why you see it down and pretty weak even now year to date.
All right, what about the Magnificent One, good old NVIDIA?
Again, I mean, wonderful company, Frank. It's still up 75% year to date. But, look, it's all about your own individual risk tolerance, time horizon. If you truly have that long-term time horizon, Frank, and, most people say they do, but then when the stock is down, 20%, 30%, 50%. So I think more than anything, what you need is a strong tenacity. You have to be able to withstand the volatility that's going to be inevitable. So as long as you have your credit card bills paid down, you've got that 6 to 9 months worth of living expenses, you can live with the volatility. You want to try to stay with the leaders. My fear is that Americans are stretched, whether it's the hardship withdrawals from people's 401k or their credit card balances now among the highest ever in history, with credit card interest rates now north of 20%. My fear is that so many Americans are strapped and makes them very difficult to hold on to stocks. So NVIDIA, wonderful company, but I think this is a name that, like Apple and those other so-called magnificent names, are due for a rest.
All right, let me ask you about one of your favorite subjects. Just kidding. Crypto and Bitcoin. What are your observations here on how Bitcoin has performed this year in the face of higher inflation? Bitcoin did hit a record high recently, and it's pulled back now down to around 63,000 here. What are your thoughts about crypto here?
Well, look, only if fools have tried to short or sidestep crypto in recent years, Frank. I mean, and even now, year to date, Bitcoin is still up 53%. I find it pretty interesting, though, that a lot of the Bitcoin-related investments, the ETFs, the ancillary names that tend to track that cryptocurrency, haven't been leading the market as they once were. In fact, one of the names is Riot, R-I-O-T. This is a big kind of Bitcoin mining and blockchain-oriented company. In fact, was at a 52-week low recently. So, there's a wonderful saying that, basically when they say when the paddy wagon comes, it takes the good girls with the bad. It's a long way of saying, look, when risk sells off, I think all risk sells off. And I think gold, GLD, is going to be a much better hedge no matter what comes down the line than Bitcoin in the weeks to come.
We're watching developments in the Middle East very closely, with tensions running extremely high following that attack by Iran on Israel last weekend. We did see oil prices spike, but they have come down. What are your market monitors there at Fox and your own thoughts here about where oil goes from here?
Again, very similar to that period in the late 1970s, Frank. Lots of tumult and, terrible.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show. Comedian John Christ.
How long have you been in Nashville? Let's see, 2018 is when I moved here. I lived in an apartment. I didn't know anything about it. I lived in L.A.
You were living in L.A.? How was that?
Yeah. Well, let's see, good for my career. Send me to rehab, though, so that's pretty much the sum of it.
The Sean Ryan Show on YouTube or wherever you listen.
Atrocities in the Middle East and spiking oil and gas prices here at home. So just as they say, a rising tide lifts all boats. I think you can own XLE here. XLE is the ETF. We've talked about it before. This just owns the plain Jane big oil companies, ExxonMobil, Occidental Petroleum, etc. They're not off from their 52-week highs. I think that's a place you can continue to make money. And another one, a little bit further off the radar screen for many listeners probably, but UGA, that's umbrella, G as in gas, A as in America. UGA, this is a security, Frank, that actually tracks the price of gas. So, if you're concerned about gas prices going up, you put, say $1,000 in UGA. If gas prices go up 10%, you'll make that $100 and hedge some of that risk. So I do think commodities are where it's at. So I'm looking at those types of names to try to profit no matter what the big market and names do.
All right, as you mentioned, the earnings parade continues, and we did get some of the big bank names, including Wells Fargo, right? Looks like that was a bright spot.
Yeah, and I'm happy to see that company at a 52-week high today, Frank. That tends to be a bullish indicator. Trends tend to persist. So WFC, and in fact, a lot of those big cap banks have done quite well. Citigroup, JP Morgan, not far from their 52-week highs as well. So I think that's a place you can probably hang on and make some money. Interestingly, big banks, Frank, and same with insurance companies, they tend to do well during periods of higher interest rates because all those fund flows are able to be quickly reinvested at higher and higher rates. So we've already seen, short-term interest rates, let's say the 5-year note, where it's up in 20% in yield just this year. So I think that's going to be a trend. Again, you alluded to it in your intro, but people are assured that the Fed's going to be cutting rates. Well, rates are going up, and I think names like Wells Fargo are likely to continue to benefit. Finance is a good place to be.
All right, and we see mortgage rates at a new high for the year as those bond yields move higher. What about bonds and what about real estate here with mortgage rates moving higher?
People forget, Frank, in 2022, long-term government U.S. bonds, good old safe guaranteed government bonds, lost some 26%. And even now, year to date, they're down between 8 and 12%. And this is this issue with persistent inflation. It's eroding the value of people's work. It's eroding the value of their savings, and certainly the value of their fixed income investments, Frank. So I think you have to be very careful when it comes to bonds. And again, it's not speculation. I'm looking to history. Gerald Ford, and even early in his term, Jimmy Carter thought that they had inflation licked. Interest rates came down from about 8% to 6% in the earlier part of Jimmy Carter's term. 5 years later, they were north, as we said, of 10% because he didn't stop spending. So, look, inflation isn't born on Wall Street, Frank. It's born in Washington, D.C. And the more I see the president, the Congress continue to spend, the more I fear that inflation, as I said, it's not taming down. It's heating up once again.
And, of course, we cover all the bases here at Wall Street, Main Street, your street. We're all over the place here. And any other specific places, Jonathan Hoenig, where you are putting money now and or taking it off the table?
A lot's been said about the rising cost of food. So just as with the gas, there's actually a way to participate in that, Frank. Interesting security. Of course, do your own due diligence, talk with an advisor. But DBA, that's David, B as in boy, A as in agriculture, it actually tracks a basket of corn, wheat, and soybeans. And, there was a meme, or I should say a post going around today, Frank. Someone reported that they were paying north of $7 for one apple at a particularly upscale Whole Foods in New York City. So can you imagine $7 for just one apple? And maybe even if it's only $6 or $5, we can all relate because we see it in our grocery bills. I mean, $5 doesn't get you much anymore. So DBA is one way to participate, and I do own that one over at capitals.pig.com.
$7 for an apple and 23 cents for a banana at Trader Joe's. So, yeah, inflation, it's out there. Right?
Indeed, yeah. And I think that will continue to be the story. Kind of a sobering stat out of Bank of America a couple of days ago, Frank. Once inflation goes above 5%, it tends to stay above that for a longer period of time, and in fact, not come back below 2%, which is the Fed's optimum target, over a period of 10 years. So, I mean, it sounds pretty sobering, but we could be looking at 2031 before the Fed finally achieves that 2% goal.
Jonathan, thank you very much for taking the call this afternoon. We'll be looking for you on Fox Business and Fox News. Thank you very much. That is investment expert Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, it's always great to speak with you. Thanks very much for taking the call this afternoon.
Anytime. My pleasure. Thank you, Frank.
Thank you very much. We're looking for you on social media as well. And friends, let's be honest, sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being the wrong place at the wrong time. We're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's critical to know who to call first. Clark Fielding became a lawyer to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most terrific situations. I always say to put the Fielding Law team in your phone under the word accident, so all you have to do is hit dial. Believe me, you'll feel a lot better having set this up for yourself and your family. The number is 833-88-SHARK. That's 833-88-SHARK. With the population exploding and increased vehicles on the freeways, be proactive, prepare for the worst, and expect the best. But if and when you do need help, call Clark Fielding and his team of sharks. The number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. 790 KBC welcomes the band War to the LA County Fair coming up on May 3rd. It's that time of the year again for corn dogs and cotton candy. Don't miss the country's largest county fair. This year's theme, Stars, Stripes, and Fun. Tickets on sale now at lacountyfair.com. Right now, you can win. Caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-790-5222. Mottek On Money continues here in 790 KBC. The Dow turned out to be a winner today, up 22 points. Another seesaw session. The Dow settling at 37,775. The S&P 500 pulling back 11 at 5,011. And the NASDAQ composite down 82 at 15,601. The yield in the 10-year note now 4.63%. Mortgage rates hitting a new high for the year, according to the latest survey for mortgage giant Freddie Mac that came out today. The price of gold pulling back $3 at $2,395 an ounce. Silver right now at $28.29 an ounce. That is down 9 cents on the day. In the cryptos, we see a Bitcoin up about $20 at $63,563. Ethereum up 6 at $3,074. And Doge at the moment at 15 cents. The price of oil followed the bouncing ball on this one, down 3 days in a row, up slightly today for crude oil in New York of 4 cents to $82.73 a barrel. Brent crude in London slipping 18 cents, back below $90 a barrel now there at 87.11 as tensions remain high in the Middle East. At the gas pump, tensions are high here too as prices remain stubbornly high, about 40 cents a gallon higher than where they were just about a month ago. $5.93 the average price for regular now in the LA Long Beach area, $5.75 the average price now for premium. Mottek On Money continues here in 790 KBC. The dust still settling following tax day, April 15th. April 15th in the rearview mirror this week, but always looking out for you is America's leading taxpayer advocate, Grover Norquist, who joins me live this afternoon. New calls to defund National Public Radio after their business reporter resigned this week after being suspended without pay following his writing of an op-ed article blasting NPR for its left-wing progressive bias and suppression of dissenting opinions, according to that reporter. Let's bring in Grover Norquist now. Grover, give us your reaction to this since taxpayers are funding this organization.
Well, for starters, taxpayers should not be funding a set of radio stations, a network of radio stations. That's the kind of thing they do in totalitarian regimes. In Germany, Soviet Union, the worst countries in the world, the government runs the radio stations and the television stations. Or in America, we don't have the government run churches or synagogues or mosques or newspapers. The First Amendment says, get out of that zone, out of freedom of the press, out of freedom of religion, not manage it, not participate in it, get out of it, leave it alone. And we have a lot of money going to National Public Radio, going back to the early 1960s. And the reason we got a government-funded radio network, as un-American as that sounds and is that there was a speech given by this very self-important person who didn't like what was on TV. And he wanted to be in charge of what everybody could see on TV. So he said that there was a national wasteland. Television was a wasteland. And that the government should come in and start deciding what goes on television because it was a wasteland to do that. The guy named Newton Minow, and he had come up with a vast wasteland. Yes, it's not just a wasteland; it was a vast wasteland. I looked up what the most popular shows were in 1963 when he said it was a vast wasteland. Bonanza, Western, Dick Van Dyke Show, great comedy, Andy Griffin Show, the Lucille Ball Show, Ed Sullivan Show, Danny Thomas Show, the Red Skelton Show. These are great shows now. Lassie for the kids, Jackie Gleason. I mean, these are very interesting shows. But he didn't like them. He wanted ballet or something. And so he said, let's go steal money from taxpayers and put on TV something I would like. And now there's even first of all, it's a bad idea. But now there are hundreds of radio stations on satellite and hundreds of television stations. You can get anything you want on television. There's no excuse for a government show, even for, rich people who like ballet. They can have their own TV show without stealing other people's money.
You got us nostalgic here when comedy was funny with some of those songs that of those shows that you mentioned, right? So we long for that again. And let me ask you this: given what's happened there in that bombshell op-ed in the Free Press that he wrote, the guy who...
The Rolling Stone Music Now podcast gets inside the biggest stories with Rolling Stone senior writer Brian Hyatt.
Now here is my conversation with Jacob Knoll. Your story is an amazing one, and obviously you lost your dad when you were only 1 year old.
It was definitely a screwy way to grow up. I think that a lot of people never heard of who I am, and then they see me joining this band, and they must think this kid must have just been handed everything, or nepotism kid. It's a gift that I have an opportunity to sing in such a big band like my father and my uncle's band, Sublime.
Rolling Stone Music Now, wherever you listen.
Worked there at NPR for 25 years or so.
Yes.
What kind of reaction is this getting among the folks you're talking to there on Capitol Hill, and now this renewed push to defund NPR?
Yeah, there's a real argument that's building to defund it because, among other things, the guy criticizes them for having only one worldview, all being left-wing. Their audience is increasingly just left-wing because they've gotten so not just liberal, but just left-wing, and constantly everything's about identity politics and racism and racial discrimination by the actual liberals doing all this stuff. There's no excuse for this behavior, and so what do to prove that they're not a bunch of thugs? They fire the guy who raised a question about why they're doing it this way and why don't they have other voices. He pointed out there are like no Republicans and 87, I think, Democrats on their editorial board there, which means there's no diversity of thought, which is what matters. Not color of your skin. That doesn't matter in America. But there's no diversity of thought in something the government funds. So they steal money from people who have all sorts of different political views and hand it to a bunch of people who all think just like Biden. And the new head of it, the lady who came in, has a whole series of her tweets, which she is beyond the pale on sort of odd left-wing stuff. And then they prove that they're thugs by firing the guy for raising the question about, who've been there for 25 years working with him, okay? They can't stand criticism or a question, and they fire him. This is not a group of people who believe in independent thought.
On there live with Grover Norquist. So what do you think will happen with this? Is there going to be a serious effort to pull federal funding for NPR in the House, of course, which controls the purse strings? Is that going to happen?
Well, I think because the House is so narrow, all they have to do is get one or two New York Republicans to say let's wait on this, and the Senate's still run by Democrats, and of course Biden loves National Public Radio. That's him. It's him talking all day. And so he politicians, people who like power and real power, really appreciate sycophantic press, which tell Stalin how great he is all the time. Pravda. And they love that kind of press. They hate the kind of press that asks, tricky questions or questions that have numbers in them. If there's a different president and a more Republican Congress, I think you would see the beginning of, guys, why in the world, of all the things that we spend money on, why do we do this? This is the sort of thing that doesn't need to be funded at all. And the people who want left-wing radio, there will be plenty of left-wing radio stations, just not paid for with money taken by force from average Americans.
Speaking of taxpayers, and another, of course, a big issue this week, and that is aid for Israel as well as Ukraine. Tell us about the latest there that's being discussed, and where do things stand there?
Well, things could have moved faster while I'm just here at work, but we expect, if it hasn't already happened tonight, that bills will move through the House with bipartisan support. Most Republicans and most Democrats, but not all Democrats and not all Republicans, that would provide military support for, Ukraine. No troops, but military support and equipment and to fight the Russians, support for Israel and support for Taiwan. So I think those are likely to pass. These are not, no commitment of troops, but support so that they can defend themselves. And that has always had sort of a majority support in the House and Senate But there are a handful of people who quite understandably go, you know what? One, this is expensive, and two, when we got involved in Iraq, didn't that seem to last longer than they kind of promised? So I think we're having a mature debate about it, and I'm generally supportive of letting the Ukrainians fight their own war and keep the Russians off their territory.
Grover Norquist, thank you for covering all the bases as always this afternoon. We'll keep an open line to you with that front row seat there on Capitol Hill. Grover Norquist, the president of Americans for Tax Reform. Thanks again for taking the call here this afternoon.
Thank you.
Mottek On Money continues here in 790 KBC. Good afternoon. He did it again after co-founding LegalZoom, ShoeDazzle, and The Honest Company, BAM Ventures, several billion-dollar companies here. Mega entrepreneur Brian Lee now has a new venture, Arena Club, combining his passion for sports memorabilia with a tech-driven approach, giving consumers a virtual card show experience. Joining us live now, the man himself, entrepreneurial mastermind Brian Lee. Brian Lee, thank you very much for taking the call here. It's wonderful to reconnect with you here this afternoon.
Thank you so much for having me, Frank. Happy to be here.
Wonderful. It's been a while since we've chatted behind live microphones here, so take it from the top and tell us about your latest venture here.
Yeah, super excited about it. It's called arenaclub.com, and you just mentioned that it's more of a type of a digital card show, if you will. So anyone who has collected baseball or basketball cards in the past, or even Pokemon cards, it's a place for you to gather, meet other collectors, buy, sell, and trade with each other, and just have a lot of fun.
That's terrific. How did you get into sports memorabilia?
You know, I started collecting as a kid, and I was that guy who never stopped. Most of my friends stopped collecting baseball and basketball cards, call it junior high school. I just kept going. I still remember my first job as a lawyer back in the day. I got my first paycheck, and I took my parents out to dinner, and the rest of the money I bought Kobe Bryant rookie cards.
Wow. And they must be worth quite a bit. So that's how it started, and this seems to be really taking off now. These platforms. What's unique about this one? Tell us more about this virtual card show experience and how people can trade and so forth.
Yeah, absolutely. So at Arena Club, we do a couple things differently. We do provide grading, which is when you send us a raw card, we call it. We do authenticate it. We grade it on a scale of 1 to 10 using both humans and AI to provide grading reports. So then you know exactly why your card, is valued as at a certain grade or not. But then the other thing is we have this marketplace where you can set up a showroom. You send us your cards, we'll put them in your showroom, and then you can buy, sell, and trade with everyone else who has a showroom. And so, again, it's a lot of fun, and you have to come check it out. It's arenaclub.com, and it's I'm on it every day, of course, and I'm buying and selling myself.
That's fantastic. What is the hottest thing on there right now?
There's a lot of hot things. Of course, it's baseball season and basketball season towards the end of basketball season, so that's always whatever sports are going or kind of that season. So right now, there's a lot of hot baseball players that people are collecting, from Ellie De La Cruz to Jackson Chourio and Jackson Holiday as some young prospects. On the Dodger side, you've got Dalton Rushing that people are collecting. You have Pages, who just got called up for the minors, so he's worth collecting. And, of course, the granddaddy of them all is Ohtani, that everyone loves and is rooting for here in Los Angeles.
That's terrific. Well, I've, of course, over the years have been tremendously impressed with your entrepreneurial spirit, and have been at occasions where you were honored by EY and other organizations after you co-founded LegalZoom, ShoeDazzle, and The Honest Company. Tell us about that entrepreneurial spirit that you have and what you see happening here in the Los Angeles area.
Yeah, absolutely. So I think it's just something I can't shake, to be quite honest, Frank. I love starting companies. I love building them and growing them. I actually promised my wife, Mira, that after The Honest Company, I would never be a CEO again. And that lasted all but 6 months. And I got back into it and started building Arena Club. But yeah, I think the entrepreneur spirit is very, very strong here in the City of Angels. I see the ecosystem of startups really growing. It continues to grow. We're getting a lot of support financially from more and more venture capital firms and angel investors, helping these entrepreneurs get things started. And just more and more talent moving to the city. I see more and more entrepreneurs moving to Los Angeles to set up shop and to build their dreams right here.
And during all this time, you've seen the rise in Silicon Beach. It's pretty much silicon everywhere here now in the Los Angeles area. But what's your gut feeling about this economy and what's happening on the tech scene here?
Yeah, so, we definitely did hit a peak, call it during the COVID period when it came to venture capital and valuations and so forth. And valuations have really come down. It's a tough time to be in venture, truthfully, and it's a tough time to raise funding for startups and especially consumer startups. But the very, very best companies are still being funded. I'm starting to see a lot of the this frozen activity starting to de-thaw. I'm starting to see deals get done that weren't getting done even 4 or 5 months ago. So that's exciting. And again, I still feel the future is extremely bright for entrepreneurship, the tech scene here in Los Angeles. I think it's a great city to start something.
Very exciting. And venture capital world, the venture associations here, and a lot of very pumped up entrepreneurs organization, and I know you've probably had connections across the board. What is the hottest topic these days? Is it AI, or what are these people talking about here in Silicon Beach and throughout the Los Angeles area?
Yeah, well, of course, AI. AI is everywhere right now, and there's not a single industry or business that's not going to be impacted by AI. So, of course, every capitalist is looking at how they could partake and participate in the growth of this new technology. It's not even really that new, but it's been around, but it's really starting to gain a lot of steam now. So AI it's interesting. I consider AI to be more like water, right? It's everywhere, and you're not going to be able to avoid it. It's going to be penetrated into every aspect of your life. And so, in terms of, the winners in AI, there's definitely some clear winners already, the ChatGPTs of the world and the OpenAIs and so forth, of course, but every industry is going to be impacted. And so, yeah, we're paying close attention to that. We're paying close attention to how AI is going to affect the city of Los Angeles when it comes to entertainment and when it comes to, we call it generative AI, when it comes to creating different characters and bringing people to life and so forth in movies and television and so forth, because that's going to have a pretty large impact in Hollywood.
Terrific, Brian. Well, we'll keep the line open to you, and we certainly wish you all the best in this latest venture. We're going to check it out right away, arenaclub.com. We've been speaking to mega entrepreneur Brian Lee with his latest venture, Arena Club, after co-founding LegalZoom, Shoe Dazzle, The Honest Company, BAM Ventures, several billion-dollar companies based here in Los Angeles. Brian Lee, thank you very much for coming to the line here this afternoon.
Thank you so much for having me. That was a lot of fun, Frank. Thank you.
Thank you very much, and look forward to staying in touch with you and getting you back on the air again here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be doing more at 4 tomorrow afternoon. Mottek On Money, 790 KBC.
Our house is a mess. Come on in. I'm Amber Wallen, internet comedian and host of your new favorite podcast, Fly on the Wall.
Okay, that's pretty presumptuous to assume that this is going to be their favorite podcast, by the way.
Anyway, that wasp that you just heard interrupt me is my husband.
And co-host, Benjamin Wallen.
Listen in as we discuss relationships and keeping our sweet baby kid alive.
Fly on the Wallen, wherever you listen.